What's up, party people? 2 YouTubes in a week. It's like the old days. I don't think I ever actually used to do 2 in a week. But anyway, how is everybody? Another shitty day. Trade wars. At least we didn't get inflation, a bad inflation reading. But, and magnet chip. Oh, magnet chip. You hurt my head so much. I don't want to talk about magnet chip right now. Maybe at the end of the YouTube. And we can talk about other stuff too if you guys want. But I want to talk about ARVN, which is a stock I never heard of until yesterday. Actually, somebody brought it up to me last week or 2 weeks ago about the readout that was coming up, but I don't really do readouts anymore, so I didn't even look at it. But yesterday it was down 50% because of that readout. And within, I don't know, 5 minutes of looking at it, I already started buying it. Luckily, I didn't look at it until a few hours after the market opened. So I wasn't buying it at $9.50 or $10 in the first hour, but my average price is here, like $8.45. What is ARVN? Well, let me tell you something up front. Not only do I not usually know it, not only am I usually ignorant when it comes to biotech and science, but in this case, I probably know as much about this company as Nora does, my daughter, at least what they do. I have no idea what a degrader is. I didn't even try to learn what a degrader is the last 24 hours, and I don't really care what a degrader is. I will say that if you look at the 10-year chart of this company, you'll see back in, I think it was 2019, you will see, I'm gonna give you a little history lesson with this company. So if you go back to, it was December 2020. The stock went from 25 to 80 overnight. And I believe that was when they had proof of concept in their platform, which is this whole idea of this degrader thing they're doing for cancer drugs and for neuroscience, for neuromuscular diseases. And stock went up, tripled. And in 2021, they took their lead drug and they signed a deal with Pfizer to co-develop it. The stock did not go up on that because they probably were hoping for a full buyout. But anyway, the stock was hanging around 65 to 100 through most of 2021. What was this Pfizer deal? So they signed a deal with Pfizer that gave them $650 million up front. And then they also bought $350 million worth of stock that gave them a 5% stake in the company. I believe they paid like $100 a share for the stock. All in, they spent $1 billion, and the $1 billion got them 50% of this drug and 5% of the overall company. The goal was to co-promote the deal. So co-promote the drug, excuse me. They each split the cost 50-50, and they split the profits 50-50, if there are any at some point. That was 2021. We are now in 2025, and the first phase 3 and only phase 3 readout of that drug just hit yesterday, and it was mixed. There's basically, how I understand it, there's the overall trial, and then there was a subsection, which is like some sort of mutant population. And in order for this drug to have multi-billion blockbuster potential, it would have had to hit in the overall intent to treat subjects, which is everybody that was in the trial. But it only hit in the mutant, okay? And this is in breast cancer. And the stock went from 15 to 850, okay? I'm going to get to valuation and everything going forward. The press release from Pfizer was really, really light on facts. And there was no conference call done by the management team of either Pfizer or of Arvinas. But Arvinas did some calls with sell side yesterday and this morning, and I have some notes on that, which I'll discuss later. They also were supposed to present yesterday at a fireside, and they canceled that. They're supposed to present again tomorrow, I think, at a fireside. So that's why we are at 850. What has happened since that 2021 besides the Pfizer partnership? So they had another degrader that was focused on prostate cancer. And that degrader was sold to Novartis in April of 2024. So just 9 months ago. Okay. They got $150 million up front, but Novartis is going to wholly own it and develop the drug and pay for all the costs associated with bringing it to market. And Arvinas will get milestone payments, sales milestones, and royalties. It's undisclosed what the royalty rate is. I would assume it's pretty decent considering the upfront was only $150 million. That is phase 3 ready. I don't know if it's gone into phase 3 yet. Obviously, Novartis is a gigantic pharmaceutical company. Okay. And finally, they have a neuroscience pipeline, all wholly owned. And there's a bunch of phase 1 readouts of that coming this year, but it's all early on. Okay. And we'll get some evidence of safety and efficacy this year on those trials. Obviously, those could be blockbusters if they show any efficacy. What is the drug? What is the company worth today? And why am I so excited about this? So as of the end of the year, they had $1 billion in cash, and it's burning rapidly. They're burning like $400+ million a year. Okay. Because they have to co-develop this breast cancer drug with Pfizer, and the phase 3 trial is expensive. And I'll get to the future cost there, but let me just do one thing at a time. So they had $1 billion in cash at the end of the year. Currently, the market cap is $600 million. So it's trading for a negative $400 million enterprise value. For that negative $400 million, you get $1 billion in cash, a Pfizer partnership with a drug that did just hit a stat sig in a significant subgroup of the trial that just started yesterday. And many people in the biotech community think the drug will be approved or is approvable based on that subgroup. That's not all, though, with the Pfizer partnership. If that was a positive phase 3, and if they do seek an NDA, they're eligible for hundreds of millions of dollars of milestone payments for the phase 3 and for the NDA. Filing and approval. We don't know the exact number. It could be as much as $400 million. Okay. But that's not all. They're going into 2 new trials in phase 3 towards the end of this year. Those are going to be combination trials with Pfizer. So they're going to use their drug that just partially worked and other drugs in combination. Everything I've read about in the last 24 hours says that it's much more likely to work and work well in those combination trials than it did in this breast cancer monotherapy trial. Okay. And everything I read about is that Pfizer is going to go ahead with those trials, and they need this degrader. This is one of other degraders that are available on the market to run those trials. Okay. It's kind of hard for me to put a price on what all of that's worth. Okay. You have a drug that just hit in a subgroup that could potentially do $500 million to $1 billion in sales peak if approved. You get milestone payments worth hundreds of millions of dollars. And then you have 2 new trials that are going to be ran towards the end of this year that are going to take a few years. That if they work, it's blockbuster status. It's billions of sales. Okay. You sum up to me what that's all worth. I think at the very minimum, it's worth $1 billion to Pfizer. Okay, for Pfizer to clean it all up, to not pay the milestone payments, not have to share in the profits of those 2 future trials, and they're gonna have to pay. They'll have to pay the expenses. But mind you, they already paid $1 billion for 50% of this drug and 5% of the company 4 years ago, and we're way more farther along now in the development process. There's 2 more phase 3s that are going into at the end of this year. I think that's worth $1 billion, conservatively. Okay. Next, let's move to Novartis. The Novartis program is potentially even more interesting because they have to pay nothing. And Novartis is going to shoulder the hundreds of millions of dollars of costs to get that drug into phase 3 and hopefully approved. If that works, that's a blockbuster drug. Okay. And depending on what the royalties are there, worth hundreds of millions of dollars a year in pure cash flow to Arvinas, structured to where they never have to put up another dime again. Okay. What's that worth? That's worth to me at least 500 million NPV, but I don't know the number there. So let's use 500 million. Okay. And then finally, you have a neuroscience pipeline that they've spent hundreds of millions of dollars on, and there's no read through to the neuroscience pipeline versus what just read out now in this breast cancer trial. The neuroscience pipeline to me has to be worth $500 million. You can make it worth $100 million if you want, but we're going to have readouts this year. And if they show any kind of signal and efficacy, it's probably worth billions. Okay. So let's add that all up together. 1 billion from Pfizer, 1 billion in cash, 500 million from Novartis, and 0 to 500 million for the rest. That's 2.5 to 3 billion. It's trading at $600 million right now. It's trading so low that if they burn 400 million of cash this year, it'll be at cash neutral a year from now. And they'll still have all those partnerships and be further along with all of the trial readouts. Okay. But the most interesting thing to me is that I don't think it's going to remain the kind of company it is today. There is a venture capitalist that owns 15% of the company. It looks like they only own 9.9%, but they have pre-funded warrants that they got when they did an offering a few years ago. So they have 15% stake in the company. Okay. And I can assure you that they're not just sitting idly watching this go to zero. My guess is this is what happens. They had to wait for this trial to read out. This was the biggest event of the company's history. And they can't figure out what this company is worth, or what this drug is worth, I should say, until they saw whether it hit in the overall population, if it hit just in the mutant population, or if it missed completely. Now that they know where it hit, we have to wait until June for the full readout at ASCO. I don't know how long this whole process is going to take, but I think one of two things is going to happen. And I think I'm pretty confident about it. And in fact, there was a note that came out this morning from sell side that management said, and I quote, development costs RVN is on the hook for. Recall, RVN Pfizer share the VEPDAG cost 50-50, and given the stock reaction, and if shares remain depressed, it may be difficult for RVN to access additional capital to fund multi-year second-line and first-line trials. While the company has greater than $1 billion in cash and runway into 2027, they noted to us they will need to scrutinize future spend and its cost structure. We think this could be an overhang for the stock, along with investors thinking Pfizer could walk away from VEPDAG. Okay. They also say in the paragraph before, based on management's recent dialogue over the weekend, Pfizer seems keen on the oral presentation at the future meeting, and that hitting in mutant patients was the base case in both RVN's and Pfizer's minds. Plans are to move forward with 2L and 1L combo trials, and RVN will have additional phase 1 combo data updates in 2025. So, on one hand, they're saying that Pfizer's told them they are going to keep going forward with the development of this drug. On the other hand, they're saying they can't afford it, right? It's not sustainable at trading at 60% of cash, raising money to fund hundreds of millions of dollars of trials. On the other hand, I think it's worth at least $1 billion today to Pfizer versus the $600 million market cap with $1 billion in cash and a Novartis deal that has to have positive value. It's all optionality. They don't have to pay for anything. And it was just signed last year. So what do I think happens? I think one of two things happens between now and, 6 months from now. I think the whole company sold, probably to Pfizer, for multiples of where it's trading. Or I think Pfizer buys out the 50% stake in this drug, saving them the milestone payments and also bringing in it as a fully owned property for Pfizer. And in return, ARVN gets hundreds of millions of dollars of cash and some royalty on future sales. If they do that, not sell to Pfizer, but do that, it would be hugely bullish. You'll wake up the next day with, it could be, $500 million up front. It could be $1 billion. I don't know how much they're going to get. It could be a lot they get for selling the 50% of the drug they don't own. Okay. You'll wake up with a huge cash inflow, and simultaneously you'll cut your cash burn dramatically because you won't be running any of these large cancer trials anymore. You'll have a focused company that has this neuro pipeline. Plus, by the way, they have here's the pipeline page. They have multiple other cancer drugs in the pipeline they could partner. So there's tons of assets here, okay? But you'd wake up to a cash-rich company with burn slashed that has 2 partner drugs with no cash needs. It would be Pfizer and it would be Novartis, with potential hundreds of millions of royalties on both of those drugs in the future annually. And you'd have this neuroscience pipeline that has massive potential as a pure play company. What would that trade at? If it traded just at cash, it would be up 150% from here if you assume they got $500 million from Pfizer to buy out the half. If it traded with a positive EV, could be up 3 or 4x from here. What are your risks? I don't see any. What are your risks? 6 months from now, they burn another 200, 300 million. Pfizer decides they don't want to go forward with this drug anymore. They don't like it. It's not a good risk reward for them. Pfizer cuts it. And Arvinas can't fund it. So Arvinas cuts it. Okay. So then you're left with a company that has 700 or 800 million of cash with a fully partnered drug with Novartis. And it's a pure play neuroscience pipeline with, again, some cancer drugs too in the early preclinical phases. Either they partner them or they try to get proof of concept with them or whatever. But they know they can't operate as some sort of large pharma with the stock at $15 or $10. They couldn't even do it at 15, given the cash needs and the burn and the enterprise value. I mean, just look at this stock chart. This thing is a disaster. They are in a shock right now. It's pure shock and awe with the company. And they are going to have to take a long step back and see how they are going to continue as a company. I like this in some ways more than KROS. I like them both a lot. But the reason why I like this more than KROS is I believe this has a catalyst in 2025. And you will see real change happen at this company before the end of the year. I think it'll probably happen in the next 3 to 6 months. But I also don't see any downside, right? Just like KROS, if you told me right now this stock was 12, I would say, that's a buy. I want to own it at 12. I see a path to 25. And, not that aggressive of a path. And that's how you know you have something that's really interesting. If it's up 25 or 30% from where it's trading and you're still would have a similar thesis. I think that the trial had to read out. That was a clearing event for the company. A lot of people were very skeptical it was going to hit in the overall population. It didn't. And then there's no other readouts for it to be harmed by. They have a bunch of these phase 1 readouts for their neuroscience pipeline, but great. If those fucking readouts don't work, they'll cut the program. There's no value in it right now. I gave you a 0 to 500 million value for the pipeline in neuroscience. If you just look at Pfizer and Novartis, you get $1.5 billion value, I think, plus the cash. That's $2.5 billion versus 600 million market cap. It's crazy. By the way, Novartis could buy the company, but it's much more likely it would be Pfizer, or Pfizer just buys out the 50% of the drug they don't already own. Oh, I missed the start. How are you thinking of structuring the position? I'm almost all common, but I own some October 10-15 spreads for $1, and I own some December 10-15 spreads for $1.05. But these cash-rich companies, I don't see the point of spending money on options because I think there's a great safety in the stock here. I've also sold April 750 puts for 50 cents. I'll own it at $7 there. Again, that's just crazy, right? I hate to beat a dead horse here, but think about if this was a private company. this was a private company and I came to you and I just told you everything I just told you, and I said, would you like to invest at a $600 million valuation? You would think I was fucking crazy. Crazy. I recently had a takeout that happened this week. I never pitched it on YouTube because I don't usually do microcaps. But it was TSVT. Okay. And TSVT is the old, it owns half of a BECMA, and it's the old Bluebird. And the same pitch that I've been doing with all these names worked with that. That was a company that was trading at like $120 million market cap with $150 or $165 million in cash. So 120 million market cap, 165 million in cash, was going to be break even this year. And the drug that they co-own with Bristol Myers does about 300 million of sales. And it's profitable for Bristol. Okay. So their share of it is 150 million of sales. I was buying that for below cash. It got taken out at a double this week at $5. Okay. Because a private company, you wouldn't be able to buy that for below cash. It wasn't even burning any money. So, you know, each of these things have their own unique risk. Sage's risk is that you're not aligned with the management team or the board. So while the value is plainly there with Sage, if you had an aligned board, aligned management team, that stock would be $11 or $12 right now, because it's fairly worth probably $15 in a sale. What about management? Do they care about shareholders? The CEO owns over 1 million shares of this. The board owns very little stock, but this private equity firm, this venture capital firm, owns 15% of the company. So I believe they are very close with management, and they probably help put in place a lot of that management. But yes, you have a risk here that the board and the management team are not fully aligned with ARVN, but the CEO owns over 1 million shares and options. I don't know. I didn't look close enough to see if it was restricted stock or way out of the money stock options. But 1 million shares is 1 million shares. It's $8.40 stock. You know, the underlying value is there, right? And the thing that really got me so excited about it is if you read bio Twitter, people really like degraders, and they think they are the future of, you know, of cancer treatments or neuroscience. So we're not talking about some dinosaur technology like a BECMA is with TSVT. We're talking about something that, you know, Novartis just partnered with 9 months ago, you know, and to be able to get involved in that at a negative 400 million enterprise value, this stock was $100. It's $8 now. I mean, talk about turning from euphoria to total gloom. You know, the hardest part here, I think, for me, will be figuring out when to sell. Not worried about losing money. I know that sounds fucking crazy, but that's how I look at it. So I think the path here is unknown, and how long it's going to take. But and could it go down? Of course it can go down. I mean, I'm so shocked it's $8.40 in the first place. But this won't be affected by trade wars. It won't be affected by Medicare cuts, you know, by any of this stuff. Obviously, Medicare cuts in the long term would hurt it, but it's just great in this environment, right? And they don't need funding. They're funded until 2027. So there's no risk of a capital raise, right? The risk is that they can't figure out how to get to the end. Glenn with the, are you still at SWTX? Very funny guy, Glenn. I have not sold any of my SWTX. I bought a little common yesterday and I sold it in the close. It's a huge position. UBS, I think, was the one that yesterday UBS did a bus tour with Merck KGaA. And that's why the stock went up, because apparently they said that they need to still fill a 2027 LOE, and they're still interested in pharma deals. Then they said, we refuse to talk about pharma, though, on this bus tour. This is a life sciences tour. They also said that, I'll read you the exact blurb that UBS put out. UBS said, nothing more to add. This is what Merck said. Nothing more to add over the previously issued press release. If a deal goes ahead, then clearly Merck will go public. If a deal doesn't go ahead, then management, Merck, will make a decision on whether an ad hoc announcement is needed or preferred. No further comment on pharma M&A, as focus of the launch was life science. Everything I said in my previous stuff about Merck KGaA stands. I think it's extremely unlikely that Merck KGaA is the buyer. And I think that every day we go is a good thing. I think that it could take up to 8 weeks really for a new buyer to come in and complete a sale here. But it's very easy to kill it. And we are now Wednesday and nothing has been killed. And SWTX will absolutely have to kill this publicly, either through an article or through a conference call, if there is no talks going on. And I do not believe there's talks going on with Merck KGaA. And we sit and we wait. And I'm very enthused by SWTX. Ecor One owns 15%. So they have 3 million shares that are pre-funded warrants that are not shown in their share count because they didn't want to go above 9.9%. You can see this in their 13G they filed in February of 2024. Who is selling ARVN? I mean, who is selling KROS, below 10 the day it blew up? I think that these funds all own these things for different reasons. For KROS and for ARVN, they're event funds, biotech event funds that were in it for a catalyst. Pods are in it for a catalyst. And the catalyst was the readouts of those trials. And that news is over. This readout failed. And there's no direct catalyst here in the near term. And they move on to other biotech catalysts. And you change the shareholder base, right? Vultures like me come in. There's no catalyst in KROS. The phase 1 safety market data, I mean, it might enthuse people. But after that, you might not get data in KROS until late 2026 with the DMD phase 2 trial, right? But you're not paying for any of it. So that's who's selling. Why such an anemic bounce? I mean, we'll have to wait and see how long it takes, whether it bounces or not. I can't predict the short-term movement. I could just say that I got the max position. I'm at max position for ARVN. I bought today and I bought yesterday. I have no idea where it will go. Oh, I might as well pitch another idea while I'm on here. I'll update the YouTube to have the name in it. I have a huge position in SGRY, which is Surgery Partners. I think it's my second or third biggest position with BBIO, and that has not worked well. That one is a very simple thesis. I think I talked about it a little bit on a previous YouTube, but I'll mention it again. So Surgery Partners operates like surgery centers where people can go and do elective surgeries or non-elective surgeries, but outside of a hospital setting. And they're 40% owned by Bain, and they've been growing nicely. And it's a pretty good business, though with kind of weird accounting. And last year, there were a bunch of articles that said they were for sale, and they were trying to sell themselves to either strategic or to another private equity firm. And the stock went to the 30s on that news. In September or October or November of last year, the stock blew up when there were some FTC issues on another hospital company buying something like this, basically signaling that it might be hard for strategic to do stuff with the FTC's current mandate. And people just assumed the process was dead. So the stock went to the low 20s. And then in end of January, Bain put out a 13D and announced they were offering $25.75 for the remaining portion of the stock they don't own. It was a 25% premium. The stock went to about 25.50, 26, and it stood there for a while. And now the stock is trading $23.35 for two reasons. One, the market has been a disaster, so people think that Bain is going to walk. And two, people are worried that the government's going to fuck up Medicare, Medicaid, and kind of it's called neutral site legislation for surgeries is going to be implemented that might hurt them. So let me take those one at a time. So the first thing you have to do is you should read the conference call that came out a few weeks ago from Surgery Partners. They said that the neutral site legislation will affect them less than 1% of revenues, and it should end up helping them because they're a lower cost versus hospitals. 2, Medicaid is less than 5% of their revenues, and then non-material impact if there was any Medicaid changes through Congress. Nobody's talking about anything to do with Medicare right now. So that remains your, I guess, giant risk for any healthcare company if Medicare gets fucked with. Regarding the market, I think that Bain is stealing this, and I think that Bain very much wants to buy this. So the executive chairman at SGRY is the former CEO of SGRY and is a Bain partner. And he's usually on all the conference calls, but he recused himself from this conference call. And Bain has like 4 of like the 10 board seats. Now, of course, they're going to recuse themselves from all negotiations, and it's going to be a special committee. But what I really like about this idea is that this was fully shopped last year, and you have to read the Bain letter. It's in their 13D in January. You can find that at sec.gov. And they talk about how it was fully shopped and how they did not get a price for the company to result in a deal. But we don't know what the bids were. We don't know anything about the process. My guess is they did get bids. The bids were in the low 30s, and it wasn't enough for Bain to be a buyer or a seller, right? They could have teamed up with another company to buy, or they could have sold completely. And for strategic to buy it, to get mid to upper 30s, you need strategic to buy it. For another private equity firm, they probably bid 30, 31, 32, 29, something like that. The reason why this is interesting to me is this Bain bid of 25.75 is garbage. And not only do I think this will ultimately be sold, but I think it will be a 10 to 20% premium above the 25.75, coming in somewhere around $28 or $29 a share. Okay. Bain can fund this mostly through debt without putting on any more equity capital. And they could flip this in a few years, either to another private equity firm or to a strategic. It has tremendous strategic value. It's a good business. Okay. This is not Target Hospitality. It's very rare for these majority 13D things to happen, and then for there not to be ultimately to be a sale. It just doesn't happen very often. In fact, my buddy Andrew looked back, he doesn't remember a time of a major private equity firm like Bain or Blackstone or Apollo ever doing this, owning 40% of a company and putting out a 13D saying they want to buy the rest. The reason why that is they're usually exiting. They want to harvest. They want to sell to another private equity firm, or they do secondaries and they sell stock out. And they're just not doing that here. They want to take it all in. So to me, this reminds me a lot of CD&R buying CNR a few years ago. That was in the middle of a major market turmoil. The difference there is when they 13D'd, they told you that was best and final. So you knew it was far along the negotiations, but that traded at a 15% discount until it was signed 5 weeks later. This won't take months. They've already done a full process. So given the fact they've already done a full process, they don't have to do another full process. What they have to do is they have to come to terms with an agreement with Bain. They probably look to see what the bids were last year. And my guess is Bain comes pretty close to matching whatever any private equity firm was willing to pay for it. And I think that could be as much as $30 a share, but certainly more than $27 a share. The odds of a break to me seem extremely low, but the market's telling you there's a pretty decent chance of a break given it's trading where it is. Some people think it can go to the upper teens or 17 if it breaks, and maybe it does that in minute one. But this is not a hospital company, okay? They are not subject to the same risks of all the stuff that's happening right now with the legislation on Medicaid and with site neutrality. So there's no clear comp for this in the public markets, and I really, really like it. And I think we'll have a resolution there in the next 4 to 12 weeks. I think they'll want to get it done as soon as possible. So maybe it's 4 down, 5 up, and I think with like 90% chance of a deal happening. Yeah, big fan of SGRY. With Magnachip, it's so frustrating I want to talk about it. I'm not selling it. I'm not buying anymore. They're probably doing the right things. The goal would be is that they get something more than nothing for display, and then they try to sell power over the next 12 to 18 months, right? Everything's still for sale. It's just what can they get for it, and how long will it take to sell? I'll remind you, power at this level of revenues was worth over $200 million years ago. And I don't think multiples have probably changed that much on that business. That gets you to well above the stock price today. If they could actually grow the business, it'll be worth more. So I'm not buying anymore. I hate it. I sold some AMPY today. That's down to a 3.5% or 4% position. AMPY and MX are real legacy positions that have very much overstayed their welcome with me. And I should have sold them out a long, long time ago. So I'm just slowly going to try to turn the portfolio over to things I really like. I mean, if you have something like ARVN that could have 3-4x upside and a crazy margin of safety, why own other things? Is kind of how I view it. I also bought some more Trip. I think TripAdvisor is tremendously undervalued. Tremendously undervalued. The entire market cap EV is worth, Viator alone. And then you get the second most visited travel website in the world with TripAdvisor Core. And the fork, so OpenTable sold for what the fork is doing right now I think basically around what the market cap is of TripAdvisor. So there's a gazillion ways to win with TripAdvisor. These things just take time, They have to execute, and the stock will double. And again, huge margin of safety. All right. Let's see if I have any other questions. Trip Catalyst. Well, they haven't closed the LTRPA deal yet. So at any minute you could wake up and there was a strategic bidder for TripAdvisor that wanted to pay $18 to $19 a share as recently as the middle of January. It's trading at $13.50. There's a bidder out there, a strategic bidder that wanted to pay 18 to 19. You had private equity firms bidding 25 plus a year ago. Okay. It's trading at 13 with no net debt. And they're about to retire like 20% of their shares outstanding. I call that a catalyst. It's trading at like under 10 times earnings. The whole thing's crazy. Bain likely would not have bid if they didn't have at least a 10% in their back pocket. The 25% premium is a joke. So get this. Bain put the 13D out on a Tuesday morning. Okay. It has their letter in it. Their letter was dated a Monday. Okay. In the letter, they're using the Friday close price for their premium. On that Monday, the stock went up like $1. But the market wasn't alerted to the letter until Tuesday morning. Okay, it doesn't work like that. The unaffected price is the morning when they release the 13D. So their 25% premium is like a 19% premium. And even if you use the 30-day trailing, 23 or 25% is nothing. For squeeze outs with debt, you usually have to pay 50, 60, 65% premiums on the unaffected. Okay. And Bain has the firepower to do it. It's worth it. The company is worth taking it out of the high 20s. So look, people are where they're getting it wrong is they're treating it like a hospital stock. It's not a hospital stock. And they're thinking that Bain is the short-term focused, like day trading shop. No, it was a big decision for them to put that 13D out. This is not TDR and Target. There will not be a material adverse event with SGRY to derail this. Okay. No matter what happens in the near term with Medicaid and with site neutrality. And that is the difference with SGRY versus Target and why I'm much more confident here than I was with Target. SWTX 56 March call spreads 433. Where are your SWTX call spreads? I've been pretty clear. I mean, most of my STWTX call spreads are split between March and April. They're 50-65s and 55-65s. I have like 50% in each. Obviously, if I don't get a deal by next Friday, I'm going to lose a lot of money in March. I need an article or I need a deal to get any value out of either the 50-65s or the 55-65s. I am very optimistic we will hear something in SWTX in the next 10 days. I'm not positive, but I feel very good about it. By then, it'll be about 45 days, I think, from 40 days from the Reuters article. And I'm hopeful a new interloper could come in and sign a deal in 40 days. It could take as much as 6 to 8 weeks, though. I'm very confident it'll be done by April OPEX, but it'll be very painful to me if it's not done by March OPEX. I also own a ton of common, so I'm in everything with SWTX. Now we can get something at any moment. The lack of a leak is good news, not bad news. Okay, it means they have a buttoned-up process and they're working with other bankers to get the best price possible for shareholders. It does not mean that it broke. Okay, if it breaks, we'll hear about it. We'll hear about it in a leak, which is their fund's largest position. Wow, just off new lows, earnings Friday morning, so guaranteed not to hear anything on new deal. I have no idea what's going to happen with Wow. That's like a 6% position for me. It's been disappointing. I'm cautiously optimistic something will happen there. It's cheap. We'll see what happens. I don't have any real confidence there. I think it's cheap. It has a lot of leverage, and if it works, it could work really big. The process has been going on for a year, so I just don't know. It would shock me if we don't hear news on Monday. I mean, if they say process is still ongoing, it's like, you know, it wouldn't make much sense to me. I think I covered everything. Immunovant has a catalyst this month. I own like a 4% position in IMVT. I'm totally piggybacking my man Sheep. You see you can read his quarterly filings. He has huge positions in Roivant. He has huge positions in Immunovant. I think he's constructive on this readout. I'm constructive on the readout. It's very, very risky, but that's coming any day now. So if you like to gamble, IMVT is going to be, up $5 to $20, down 5 to 15 is my guess, depending on what that readout says. People are very worried about that readout. Do you think Crows moves big one way or the other on the phase 1 results? I don't know. I don't think so. They would really have to show some signs of efficacy, which in the fireside chat they just did, they won't really be able to, right? They're not going to show any weight loss because it's a muscle builder. So they're going to have to show real signs of muscle growth somehow in a 3-month, 3-month time frame. I think it's a much bigger deal for them to show that it's safe. I own PTGX because of Sheep, and he nailed it. Fully nailed it. It was one of his highest conviction ideas. So, look, IMVT is risky, but I'm sizing it appropriately. All right. I think I've spoken enough. Let's hope we don't get any trade wars. Let's hope we get this SWTX deal. Buy next Friday at 66.50 or higher. All right. Everyone take care. Good chat.